Welcome to the Gold Market Review for February 11th, 2026. We provide an educational look at the current market dynamics. Today, we'll examine the forces shaping the gold market, focusing on recent price action, macro indicators, and technical levels. As of February 11th, 2026, gold prices remained elevated above the $5,000 threshold, with spot gold trading near $5,032 per ounce. After briefly testing higher levels earlier in the week, bullion is consolidating as investors weigh strong U.S. labor data against ongoing safe haven demand. The ability to sustain prices above this psychological level reflects continued institutional and defensive positioning. Next, we examine the key macro indicators that remain central to gold's price action, alongside the current policy environment. The U.S. dollar index hovered near the 96.9 region, showing modest stability. Concurrently, the 10-year Treasury yield traded around 4.16%, reflecting persistent inflation expectations. These dynamics continue to shape gold's relative attractiveness. Recent economic data, including stronger-than-expected labor figures, influence sentiment across asset classes. Let's turn to the technical analysis. We assess momentum and oscillator readings to understand the current market temperament. Momentum indicators suggest gold is entering a consolidation phase rather than extending aggressively higher. Oscillators remain near neutral territory, indicating recent gains are being absorbed without clear signs of overextension. Immediate support is near the $5,000 to $5,014 range, while resistance approaches $5,100. Market participants are watching these boundaries closely for the next directional move. Finally, we consider the global and geopolitical factors that contribute to the broader narrative of gold pricing. Persistent demand from key importing regions and strategic buyers continues to underpin the market. Currency fluctuations and energy market volatility also contribute indirectly to precious metals pricing. Structural capital flows into reserve assets remain a significant long-term driver. Central bank diversification strategies and ongoing geopolitical uncertainties reinforce gold's role as a portfolio hedge. In summary, let's recap the key takeaways from today's gold market review. February 11th, 2026 reflects a gold market holding firmly above a historic threshold while navigating macroeconomic crosscurrents. The interaction between dollar stability, yield movements, and structural reserve demand continues to define the current market environment. Thank you for watching this educational gold market review. Remember, this content is for educational reporting only and is not financial advice. Subscribe for our daily market reports.